Welcome to FOMO Investing. I'm Brian.
And I'm Mick.
And we're a podcast focused on investing where we explore the various biases in investment decisions.
And what drives investment outcomes.
The information provided in this podcast is for entertainment purposes only. It is not intended as investment advice, so please do your own research. Hey, Mick, how's it going today?
It's going great.
One of the companies I wanted to cover is a company that I've had a small position in for a long time, but I really actually, haven't done a deep dive update on it in a long time. And it's an interesting company. It's one that kind of stays out of the news a lot, but they're doing their thing and they've got a incredibly high 90% market share. And that company is Intuitive Surgical. You familiar with the company?
I am familiar with the company. It sounds like you had a good intuition getting into that stock years ago.
I think my original thesis was more trend-based than really understanding that it was going to build the ecosystem and the dominant position that it has had over the last 30 years. But I think it's a great time to kind of look at it and look at it as a success story of a company that's gone from 0 to 1 and clearly has created $150 billion market value. And they've become a big player. And that presents some unique competitive moats, but also some uncertainty about what the future could look like. What do you think, Mick?
Love that. I love a great 0 to 1 story. And, I think part of what we're about here at FOMO is talking about the underrated 0 to 1 stories that have played out that could possibly be a 1 to 10 story here in the future.
Yeah, I think that's a great analogy because so many people missed the next wave of a successful company, whether that's Apple growing from $200 billion in market value to a trillion, several trillion. And I feel like these companies have to continue to innovate and show that the market opportunity is there. And it could be an interesting story. It's a highly innovative company. They've got AI capabilities. Everybody's talking about AI. And I just wonder, first, I think we should cover the history of the company and how they got here, and maybe then talk about where they are today, and then maybe go stretch this out, which is most of our style is to try to imagine what the future looks like. So why don't you kick it off, kind of explain how the company got to where it is today?
So what Intuitive Surgical does is they created robotic surgery. I think they were really an innovator. There was another player at the time that was also innovating in robotic surgery, who they subsequently acquired. When they IPO'd, this was kind of exploration story, really, right? Because you're talking about robotics that are used by doctors, has to be regulatory approved, FDA approved. You've got to get the doctors comfortable that this is an intervention that's going to improve health outcomes and trained. So, really like quite an effort to get it rolling. They have grown the business quite successfully. I think trailing 12 months revenue is about $10 billion, and they have over 11,000 of their robotic surgery machines in market, and have kind of over 80% market share if you define their industry as robotic surgery.
Right. So the original premise of the company, it grew out of Stanford, went to become a defense project that didn't really get picked up, but then that technology was brought back to the private sector and turned into a company. And the idea was that you could do surgery on soldiers remotely, potentially. And that vision was early, and that is still sort of the idea of remote, certainly too early, maybe in the late 90s and early 2000s. But the concept was, traditional surgery requires a large incision, and we're talking specifically soft tissues, the abdomen area. And there's recovery times, and then there's complications that could be involved in infections. And so the industry sort of evolved towards laparoscopic surgery, which is small incisions. And still there's challenges there because it's not intuitive. There's a pivot point on that small incision. And so Intuitive Surgical kind of thought about the problem differently. They thought about it from a standpoint of using a robot type tool in those small incisions to do things that you couldn't normally do, right? So it becomes more intuitive, hence the name Intuitive. And if you look at and we encourage our 12 listeners to do this, but go look at the actual product that it is today. You see these arms that come down from the device, and then you've got the doctor who sits at a console who is manipulating the robot. But it's way more than that, right? It's all about having the doctor trained on this, but then having the tools do things that, the sensitivity and avoid some of the shakiness that's involved, and having tools that know how to do the procedure and move at the very microscopic level in millimeters to be very aware of what the anatomy is doing, and the software and all of the feedback that the doctor gets is all built into the system, right? So it's an end-to-end solution that they built, but it's way more than that, because it's about the way that they built the ecosystem of the company too, right? It's not just how the product works, but they get an installed base of the devices, but then they also do tremendous amounts of surgeon training, which is part of marketing spend, but it's getting them to use the product and learn the way to use it. Then they have procedure specific instruments. So this is part of, and we'll get into it, but part of the business model is having those instruments, and then software and analytics that feed into the actual surgeries and the pre-op and post-op too. So that's part of it. And I think one of the missing things that is really a hard nut to crack is the workflows that they build in, so that the workflows become best practices and sort of in terms of surgeries, and also how the hospital operates. And so these are competitive positions that they've built that creates the overall ecosystem. And there's so many examples in technology of great ecosystems, but I can't think of one like this that just, like, from the early days of the company, they had this vision and they've executed on it. And now they're at, I would say, a clear market leading position, and we call that 0 to 1. They've reached that one. And so, Mick, just thinking about where the company is today, how do you think that they position themselves for what they're good at, and sort of like, the market that they're evolving towards?
Yeah, look, I think they've clearly cracked a hard nut, and I think it's worthwhile considering, what you said in terms of, we talk about robotics today, and there's a sense that robotics might be the next thing, the next ChatGPT moment. You see it in sort of self-driving cars. This innovation that we're talking about, that you're describing, Brian, with cameras, data capture devices, highly precise instruments, moving within a patient's, moving in a patient's body, is happening from the year 2000, right? The underlying technological capabilities, algorithms has moved across that time, and they've had 5 generations, 5 different iterations. Like their main offering, Da Vinci 5, has really, we're saying 0 to 1, but there's a big compounding at the technology level that they've gone through. And there's also, clearly a great outcome. If you've been an investor, they've compounded at 20% revenue at 20% across time, 15% over the last, decade or so.
The stock has compounded at that rate too. So I'm really impressed with their ability to execute on this, and not just execute on the vision, but to continue to innovate, because there's a belief that these companies aren't great at innovating within the organization, but they've continued to demonstrate significant increase in the capabilities with their innovation. And they spend, I think it's $900 million on R&D, something like, I don't know what percentage of revenue is that.
Yeah, they're at 10 billion. So, I mean, it's not, 9%, something like that. But it very effective R&D spend for a company their size, I would say, right?
Yeah.
And yeah, thinking about the opportunity here, I think it's worth looking at the broader technological landscape that's evolved, because we are at a technological inflection point, and they are in a very unique position in their market. And that's how I see the opportunity going forward. I think it's worthwhile framing it.
So how much more could you expect from this company? It's a $140-150 billion company. The premise of this podcast is that it could be the early stages of the next wave for long-term investors to look at this as a company that could double, triple, or more in size. And I look at the history of the company as indicative of a very highly competent, but most importantly, focused management team. This is a focused management team. They know what their market is. They know exactly what they're trying to accomplish, and they're staying ahead on the innovation curve that have pushed a lot of competitors out. But just for example, talking about the Da Vinci 5 platform. So we're talking about a system that has, 10,000 times more computing power than the prior version. It's got, all sorts of additional capabilities with AI embedded in the product. It is has 11% higher utilization, which is really the measure of the usage of the machine, in part because it's a faster machine to set up and do procedures, so the hospitals can get more use out of the product, because there's a docking process and setup and removal process, which is important to think about, because this is a surgery. So if something went wrong, you have to remove the machine and the doctor would have to intervene. But just thinking about sort of that piece of it, they constantly have this proving effect to their customers, because they have to prove the value of the customers. So just talk for a second, Mick, about what you think, how the value proposition works for their customers.
So I think from a hospital lens, right, there is an upfront cost of the machine, right? There's 1.6 million, but I think the company does a great job in explaining that this 1.6 million is a very small part of that total cost of ownership, right? It really, when you factor the other costs about the turn time in the hospital, the personnel that are being employed in the operations, the better health outcomes that hospitals are able to achieve for their patients by moving to a robotic-driven surgical procedure. There's also this element, I think you mentioned it, about the fatigue, which the doctors have, right? And this is a real, you're in a hospital setting, and that there's measurably less fatigue that the doctors experience using these robotic arms in their surgery, which ultimately compounds into better health outcomes and the lower total cost of delivery from a healthcare perspective. So I think that value proposition has played out pretty well for their customers, and I think the outcomes speak to it, right? So they've got, I think in their 10K they disclosed 3 million procedures globally, 2 million of which happen in the US, right? Which is really a significant fraction of US-based minimally invasive procedures that happen.
I think those are really great points. And another selling point on it is that if a surgery is not successful, oftentimes if there's a readmittance within 30 days, that the hospital eats the cost. And this is an important part of the thesis here. They've got 48,000 peer-reviewed articles published that sell the product because of better outcomes. And not just better outcomes, but better economics for the hospital. And so they are a company that's focused on doing things that are profitable for hospitals, better for patients, better for payers, because of the outcomes are better. And those 48,000 peer-reviewed articles, and there's thousands more every year, just 4,000 alone in 2025, to me shows that they are truly engaged with measuring everything that they do, right? So that there's, I read one statistic that, 1,000 pieces of data per second on their instruments is gathered. And all that data gathering and then data analysis and data information and even data that they give to investors on procedures run and those types of things is all available out there. So they have a very data rich mindset. But that is not easily replaced, right? So if you were to, and there are others out there, we'll get into competition that are trying to create inroads into their market. Some big, well-funded players, but I feel like having those peer-reviewed articles and having a tremendous trust in the product and knowing how their ecosystem all works and obviously driven by innovation and quality, it's a pretty interesting, very successful business. And it's going to take a lot to really change that sort of trajectory.
Yeah, absolutely. I think in my mind, the trust they've built with doctors, that's hard for competitors to replicate, right? And that's it's not, I mean, the FDA approval, that's a regulatory hurdle, which, there's others out there like J&J who are trying to bring competing devices to market. But building that trust and experience for doctors to use this unique system, I think puts them in a very unique space at this point in time, right? I mean, I think we've both kind of been teasing out, the data advantage. And I think the data advantage, maybe I'm cutting to the chase a little bit here, but
no, we should cover it because I think there's a data advantage today, and then there's a data advantage that goes maybe a long-term unappreciated part of the business model. So go into it.
The data advantage, the analogy that I think is hard to resist and works in some ways, doesn't work, is with self-driving cars.
Yeah, sure, absolutely.
Right, we're not the first ones to come up with this. I think when you look at this, and I think it goes back to kind of the inception of the company almost, right? Because one of the ideas that the company was premised on was to have these remote surgeries, which they're now successfully able to do in some cases, right? So you don't have to be in the same operating room. The doctor can be in a different operating room, which kind of changes the mechanics, if you will, or of, this certain specialty doctor is not available, but you might have a machine that can execute on behalf of that doctor. But coming back to the self-driving analogy, could this unique data set of micro incisions, the feedback be similar to the self-driving market where, companies like Tesla, Waymo, Rivian, and even NVIDIA to some extent have taken this high fidelity driving data and are working fast and really have, I'd say, more than prototype, right? You and I have ridden in a Waymo, and people are riding their Teslas on self-driving mode, hundreds, thousands of miles. Is there a version of this that translates well in the intuitive surgical framework to at some point create kind of an autopilot for surgery? I don't think that's where I think the analogy.
It's a close analogy, but it's not a perfect analogy, right? I don't think we're getting rid of surgeons as we might, and we already are getting rid of drivers in Waymos. But to have assistance and feedback and data and dashboards and information and training at your fingertips for lane assist, for backup cameras, for doing things that to make the driving experience less taxing and on the operator, the driver. That's the analogy I think that fits really well. And I think that over time, how much that they engage with the surgeon in the surgery, whether we go full autonomy, I don't know. But what I think that they're mostly focused on is using their capabilities to address disease in various areas. Now, focused in the last 30 years mostly in soft tissues, but going into new areas, and sort of like their ion product with doing what do they call it? Going into the lungs and doing sampling.
Yeah, bronchoscopy.
I've even had one, Nick, and a long time ago. But and then of course now in the January of this year they announced that they've been approved in certain cardiac procedures. So I think that those are not fully baked into the model yet. Everyone thinks of themselves as doing the traditional soft tissue urology, that kind of things. And so I think that they're looking at all of these problems, the diseases from a standpoint of not trying to take the technology to fit it into that, but really backing into it. Maybe they're going to be creating more of these individual types of machines and capabilities. That could be interesting. But they have a huge runway. So let's just talk about where they are today in terms of their runway. So we're talking about 3 million procedures today and sort of their addressable market. Is that a worldwide, Nick, or is that just US?
3 million is global. 2 of the 3 million is US.
Right. So analysts have kind of come out and said, well, okay, for just what they do, it could be around 7 or 8 million of sort of serviceable addressable market. Is that fair? So that's kind of the laparoscopic and traditional surgeries that are not being done, all of them on the Da Vinci machine.
Yeah, there's a potential doubling, if you will. You don't have to imagine new use cases as a potential doubling.
Okay, and so those are big numbers, right? That's a big step up from 3 to 8. What about just at the broader market? So this is sort of expanding the total addressable market as wide as we can think of it, and maybe potentially you're having to invent some ideas here that they will invent. So that's kind of what I call the future of the future revenue. When I do my modeling, it's like I can model what I see and has names and values, but then I know that there will be innovation in 3 years and they're going to go after some new indications. So that's kind of like the long-term robotic opportunity. I think it's another 3x from the 8. What do you think?
Yeah, I think it's hard to put a figure, but I think the story of what they did with the Ion machine in innovation there, because it's adjacent to the Da Vinci 5 system, right? It's this system that's focused on bronchoscopy. So when you've got a nodule that's detected on your lung, doctors
or potential lung cancer, right? So
of potential lung cancer, doctors are usually reluctant to go in because it's in my understanding from an anatomy perspective, it's in a very hard to reach area, and the adverse effect of maybe getting the incision wrong or getting
to do a biopsy to see what it is in the traditional sense is just very taxing on them.
Is very taxing, and you want to get other sort of indications before you go in. But I think this Ion machine has really cut the timeline for what doctors feel comfortable with, because it's such a precise instrument in being able to reach into the body and get this biopsy done, right? So this is something that they saw that's adjacent. And I think this is a good illustration of how this company's thinking. And now you couple that with the data advantage, right? They've got these Da Vinci 5 machines that are doing 3 million plus incisions a year. with detailed cameras, detailed capture of data. It's about defining what is adjacent, similar to what they did with the Ion. But now you can also use AI, as AI is kind of like eating everything, as we've said, to help partner with you to think about, what is the next area we might want to invest in. I think it's hard to predict ex ante where that's going to be, but there's,
Well, I think it's maybe not totally intuitive, but I think they've given us some hints. So I would say, we're looking at potentially gynecology is a very big growth area. We talked about the cardiac just announcement that came out in January. Think about the various heart procedures, and I think bleeding is obviously a huge issue with whenever you are dealing with blood vessels. So they have to have really, really strong use cases, and you're kind of building up to that. But I think that these are just scratching the surface. And if you took sort of like the maturity of various indications, what's interesting is they're also getting growth from things that they didn't think that robotic surgery wouldn't be necessary for, just because the cost benefit wouldn't necessarily show up as much. So gallbladder removal is one example that I read, where if you have a junior surgeon that can remove a gallbladder, it's a pretty basic surgery from what I understand, and they can do it with minimal complications. Why would you spend the money and use the advanced machine? Yet they're showing that the surgeons, number one, prefer it. So the outcomes are getting better, and it's actually been an area of growth for them. So I think it's a sign that, like, when the hospitals have the Da Vinci machine, the newer, the younger, the next generation of surgeons, that's what they know, right? Maybe they didn't learn it the old way, or maybe they just prefer it this way, and they know that the turnover is going to be better. And if the outcomes are about the same, and they can justify the added cost because of the efficiencies, the total cost of care, I'm thinking here, Mick, because the total cost of care and the efficiencies is part of the equation here, because you're talking about, surgeries that's going to be probably 3 to 4 times more expensive in some cases than traditional methods, but the total cost of care can make it as good or certainly better. And that's part of the research. That's part of the studies that continue to happen to show that it's just a better way of doing business. And so, I think about, we're in this period of time, we talked about 0 to 1, where you've got a generation of surgeons that learned laparoscopic surgeries and traditional surgery methods, but maybe the next generation is getting all their feedback and training on state-of-the-art Da Vinci systems with a high install base in the US. And that's interesting, right? Because it's so defendable in terms of like that you couldn't even go back the old way, even if you wanted to, right? If you're looking for shortcuts as a hospital corporation, and you wouldn't be replacing the Da Vinci. There are some things that they're trying to do, and I've seen some threats with that, with potentially taking the consumables, the parts that need to be replaced, which can cost between $900 to $3,000 per procedure, on average about $1,900, and whether they can refurbish them, or they could have some suppliers that get FDA approved but can interface with the machine if that's allowed, or if the doctors are demanding that they have the intuitive products. I think it's a question that I have, because more and more this business has had a recurring revenue model, Mick, and it's actually a story of recurring revenue, right?
Absolutely. It's razors and blades. If you look at their revenue breakdown of their 10 billion, 25% of it is the sale of machines, right? The other 75 is from service and accessories and instruments. These are the consumables that you're talking about that go in and are replaced in each surgery at 100%.
That to me shows that there are some competitive threats here from those that are trying to infiltrate that piece of the business. But I guess if you kind of make the analogy of printer to printer cartridge kind of analogy here, the consumable part of it, I don't think it's that simple, right? And so They obviously they have the FDA approvals. That is a barrier to entry. Everything has to be FDA approved and reviewed. Um, they also, they're already going to be doing service and maintenance as another cost item, right? So that can cost between $95,000 to $225,000 per machine per year. And so, like, part of the reconditioning that's already happening with the service and maintenance is happening on the machine. And so, like, it's just part of the ecosystem, right? And so I find that there will be some around the edges, but I don't think it's the main story that you're going to have. I'm going to make it up. It's some cheap third party provider of parts.
These aren't printer cartridges, right?
They're not printer cartridges.
Absolutely not, right?
No, but also, and I think this is an important point too, is that when the customers are seeking out treatments and they look for where they can get robotic surgery done because they're aware of the outcomes, they want the full package, right? They want everything to be done, right, with Intuitive Surgical's machines, parts, with doctors trained on it and everything. So if there's any sort of lack of trust in there, or by trying to cut some corners to maybe use a part that's been refurbished or reconditioned, I think that the patients are going to stand up and protest, and same with the doctors, because they're not so concerned about the reimbursement piece of it or the cost of it. They just want the highest outcomes for their patients.
You want good outcome for your patients, and if you're a doctor or you're a hospital, I mean, you've also got liability concern, right? You don't want to be that guy who's who creates an adverse outcome because you're penny pinching on the stapling machine or whatever, right? That is closing out the surgery.
Okay, so let's just take the data step one a little bit far. I think we've covered sort of the facts, the financials, the razor blades model, analogy rather of the consumables. But I think the AI opportunity with data is super interesting. What do you think, Mick?
Absolutely. I think, as an investor, it's in this environment, right? Everything, there's the things, software eats the world, AI is eating the world. Some of these are overplayed, right? If you look in the semis world, Intel has gone 6x over the last year. Everyone is looking for the AI story. But I think the interesting AI story are the ones where you've got hard to replicate data and you've got verifiable outcomes, right? The AI story that everyone is loving at the moment is coding. Right. Why is coding such a great AI story? Because you've got lots of good data, right? In the sense you've got tons of open source code, closed source code that's some of these models have access to and can be trained on. And then you've got verifiable outcomes, right? The program runs, the program doesn't run. So you have a way to know that. And so you got to start looking throughout in every industry, where do you have data moats? And I would argue that Intuitive Surgical arguably has a unique data moat here, right? The data capture from these 3 million procedures that will grow over time, the Da Vinci 5 machines in particular with their data capture is going to create a data set. And it doesn't have to be, right? It doesn't have to be, you don't need to jump to full self-driving in that analogy. You can be the assist, the robotic assist. You can be the parallel park with cameras.
There's some YouTube videos on this and talking about sort of how the surgeon's movement works and how, they can measure everything. We talked about the 1,000 data points per second that they capture, but from a training perspective, all of that is it's somewhat like a roadmap of the human anatomy in a way that can be used in unknown ways, right? We're still very early in understanding all parts of the way that the human body works, clearly, and I feel like to discount that data is short-sighted, right? To think that we've got all the data and that some competitor could step in and go easily gather that data, or to have the history of the data, to have the history of all the procedures that have been done, to know, what the outcomes were, and to obviously continually build that flywheel of continuous improvement, that they are so far ahead. There are competitors, and that's part of where we should talk about for a second too, is also competitors, where the stock is today. Is it a good value? The stock has traded down from, I think it peaked about a year ago in $535 a share or something like that. It's down to around 420 as we're recording. As the market has just, been hitting new highs. It's been doing its own story, but part of it is the cycle of the product, with the Vinci coming out in March of 2024. We're recording here a little bit more than 2 years from that. The product's been a very successful launch, but just thinking about the company, Mick, in terms of the stock and maybe some of the competitive environment, what are you seeing out there?
Yeah, I mean, like, it depends on which story you believe, right? So if you look at some of the metrics at a 10 billion revenue run rate on trailing 12, 150 billion market cap, you're at a 15x revenue. If you look at it from an earnings perspective at 3 billion, you're at a 50p. So, from that trailing lens, it's not cheap, even though it's down from the highs. But
it's never been cheap, Nick.
It's never been cheap, and I think part of the reason it's historically never been cheap is the recurring revenue element of things, right? This
not only that, but they've not had serious competition. Like they've had some try, but never really have gotten a foothold, and they've been able to out innovate and out position themselves. But they're also just extremely successful capital allocators, and no debt, and they've highly profitable, right? So we're talking, what is their gross margins are in the
65% gross margins,
operating margins in the 40s, right? So
yep,
very, very successful business. They will run into, I think, and that's maybe why the market is taking a step back too, the rule of large numbers, where they're growing off a big base already. And so I think some of their guidance was from, the upper teens down to the mid teens in terms of their revenue guidance going forward. I think that's a function also of just a smart CFO who's trying to keep things so that they can continue to exceed expectations. But there will be some slowing. There will be some margin decline, as not only they potentially fight off some competitive threats, but also as new systems are coming online. So I think Ion has been growing off a good base, but part of the margin compression has been related to the Ion and getting that platform to reach some of the manufacturing scaling that they hope to get with, the Da Vinci platform and things like that. So there's always an explanation. There's a story. What's encouraging is also the fact that there's less of these waves between product cycles, because they're doing things like financing, leasing programs for the machines. So you can have smoothing out effect of some of the revenue versus the cycle upgrades. Another innovating thing is they're taking some of the older machines and they're moving those to new markets. So kind of like a refurbishment program. They have these guarantees that not only the existing technology or the new technology will be backwards compatible with the existing technology. So, the instruments will fit. But it's a way for them to, again, start to build these footholds, because I feel like, the US opportunity is still very much there, but this is a company that's going to have a huge opportunity to grow internationally.
Yeah. International is only about 32% of revenue, and clearly there's a ton of opportunity there, right? There's some just from demographics, you've got way more operations happening outside the United States where this machine could potentially be valuable. And I think that's where some of the way they're thinking about pricing, outcome-based pricing, and then the refurbished machines, which may be at a much more accessible price point for some of those non-US markets.
Outcome-based pricing is actually, it's mostly a US thing too. So as that model continues to evolve, I think that's kind of a trend in healthcare, right? So you pay for outcomes and potentially that has the opportunity to get them more footholds because of the strength of the studies and all of the data that they've captured to demonstrate the value. So yeah, international is going to be the huge opportunity. Just take it for a second, Mick, and imagine sort of the future here. What does this company look like in 5, 10, whatever time period you want to think about?
So the bull story here is they get that other 100% of the market that they have to grow, right? Like, so they double in size on their current platform, and also the correlate, they continue to be a market leader in their industry. I think the optionality here is it's hard to articulate the vision, because it's like trying to articulate where we end up with agentic engineering, which is really coming into view in real time as we get experience, from the GPT moment to agentic engineering. It looks obvious in hindsight, but it's hard to see looking forward. And so I think all I can say is, if I'm in that rear view mirror 5 years out, it seems obvious that the data was going to tell us we have this cross application to invent another machine, or
right, another indication. It always looks obvious in retrospect, but when you're a market leader, you can invent the future, right? So you can, protect what you have, but invent the future. I think part of the story is a bit of the fact that because their margins are very attractive, they've obviously got a very successful business. It's going to attract competition. And so the question that I think will remain at the top of my mind is the durability of their recurring revenue, which we've seen grow as a percentage of their revenue. But that's what investors really like to see, the predictability of the company. And you're still a product-based company. So more and more services, more and more recurring revenue, more predictable revenue. One of the research points that I came across is like, $1.6 million for a machine or whatever it costs, as they innovate, is still a relatively small part of the overall sort of surgery infrastructure that goes into paying salaries and space and all these things. So it seems very expensive, like a hurdle, but I also know that it's part of what's expected in state of the art surgery centers. And so, whether or not we go down the path of actually replacing some of the other costs that go with, labor, as the AI world is constantly debating, who knows? But as utilization and procedures continue to drive this company forward, I think we're just scratching the surface in terms of its runway. So just thinking about the bull case, what other things do you think are part of sort of the upside here? And we're talking, I read one thing that said that, the next 10 years of revenue with the current installed base is sort of in the bag. It's sort of there for their taking if they can execute. That's an interesting thought process. They're obviously going to continue to sell into this. I think the AI piece of it's so early too. It's just
it's early, and the data will tell a story, which will tell the next step. I mean, the thing that's happening adjacent to them, right, is the general robotics story, right? The SpaceX's of the world, the Googles of the
Tesla's a
world.
robot company, right?
Tesla's a robot company. And there's this sort of narrative that the next thing is really robots, and it's not out of the question that some of the innovation may come from, like everyone knew of NVIDIA, right? Everyone knew the graphics company, right? But then suddenly it entered center stage, and people look back at advanced computing videos from Jensen Huang. It's the history becomes clear in retrospect. I mean, it's not inconceivable that they have a role to play in the broader robotics race that is kicking off at
I think it's an important point. So to time back to our last podcast, Michael Burry talks about Palantir and NVIDIA being in the right place at the right time, two of the luckiest companies in history that didn't design for the AI, in particular for AI and large language models in particular, but they clearly benefited, and everyone thinks of them as that today. So as robots become more mainstream in various uses of our life, they've already solved a very difficult problem, which is robotic surgery in, regulatory approved in terms of the reliability, sensitivity, and performance of robotics. I think it's a competitive advantage that certainly lends itself to other areas of robotics. I don't know what that might be, but surely if there's a right place at the right time company that has got technology and capabilities, they're a leading robot company. And I don't even know what that could look like, to be honest with you, Mick. I mean, are we each going to have our own personal robot like Elon thinks? I don't know. I kind of like cutting my own grass, but if my robot wants to do it.
That's the question of time, Brian.
True. So, and there are, like, as you mentioned, there are competitive threats here from big players. So, I actually think about these competitive threats from, it's kind of always good to have competition to continue innovation. And I think their market, they're forward thinking in terms of innovation, and who knows what other interesting things they have up their sleeve in terms of their next version of Da Vinci or any other new products that they're coming out with. But no, it's clear to me that they've got a lot of opportunities that we will revisit in 10 years and it'll look obvious. And even if they continue to do the addressable markets, I think they're going to be growing. So yeah, it's an expensive valuation of a company. I certainly think I'm an investor. I've held it for a long time. I've never had I've never added to it. I bought it 15 years ago, had a small position and held on to it, and it's done quite well for me. But who knows? These are one of these points in time where you might want to look at a company that's been around for 30 years and see a new inflection point in it. And it happens from time to time where you rethink the story and you say, well, actually, that's an AI play. That's a robotics play. That's a huge data play that no one's talking about.
Yeah, a redefining moment.
Right. So then they happen to be in the surgery space, but whether they drop surgical from their name and are just known as intuitive, and they're doing all sorts of things. I mean, the company's not really going to talk about this because I think from day one, they've always been hyper focused on who they are and what they do and how they solve the problems in the healthcare industry. It's going to not be a tomorrow thing. It's going to be a long run thing, but we'll have to keep an eye on it for sure. And it remains part of the right trends that I like to see. They're not in a declining industry. They're in a rapidly evolving and growing industry.
Absolutely. I think they're aware of their AI story, and they might be careful. I think Dave Rosa did an interesting job answering some of the questions that folks had on the Q1 call. We can link to that, if you're curious about how the company's articulating the AI story. But I think if you take a broader lens of things and trying to look around corners, which companies have unique data that could be valuable with AI, this is definitely one to watch.
Great, Meg. Well, it's been a lot of fun. The company's Intuitive Surgical, about 140, $150 billion company. And it's a proverbial compounder, Mick. If you look at a chart of this company, it's just they continue to execute. I mean, what a great story. What a great management team. What a great technology industry. I almost called it, when we first talked about this, the perfect company. I think I've gotten educated that this is obviously they're going to attract a lot of new entrants on the profitability and the growth story. Maybe it's a buying opportunity today with some of these things being baked into the stock price, but with a long-term mindset and sort of adding at good times, I think investors will be doing. And this company could be quite bigger in the future. All right, Nick, this has been a lot of fun.
Fun as always.
All right, take care.
Chat soon. Take care. Bye.